Oh man, FOMC day. Is today the day that Jerome Powell rug pulls crypto markets? We go into FOMC day, and I've got some huge warnings for you. You're going to want to watch this video to the very end. It's not just any FOMC meeting. We're going to get the summary of economic projections. So I'm going to break down exactly what to expect. You're seeing the market a little bit green here to start the day, seeing Bitcoin up about 1%, seeing certain altcoins. I saw Melania pumping 10%, Sonic pumping close to 5%. But I'm sorry to say this video is not going to be a positive one, because I see this FOMC meeting today as a lose-lose. I'm going to explain exactly why and my thoughts around this. The first thing that we need to take a look at is, are we going to get a rate cut, right? And it's no shock, no surprise that this market, more than I've seen, pretty much 100% probability that we're going to get a rate cut. A pause, right? This market is just expecting that pause. So straight away, we need to get beyond that, and we need to talk about what is Jerome Powell going to say in his press conference, but more importantly than that, the summary of economic projections. Now, what is the backdrop behind this meeting, right? What is it that we're expecting? Well, we know the backdrop is that Trump is at some point going to start wanting to put pressure on Jerome Powell to rate cut, right? He's going to want him to loosen monetary policy, to make the economy great again, and to start stimulating the economy so people feel better off. His voter base feels better off. That's going to help him with his legacy and his political ambitions. But that being said, Jerome Powell has to thread the eye of the needle. He has to be very, very careful, because if he starts to project that the economy is in pain, that we could be heading for a recession, that's going to induce further panic in the markets. So this is going to be a very strategically paid meeting, as far as I'm concerned, from Jerome Powell. I don't think he can telegraph his hand either way, right? I think how he will play this today is we're going to get the rate cut, right? No surprise around that. I mean, the rate pause. I keep saying rate cut. Rate pause. No surprise around that. Everyone just expects us to get that pause and no cut today. Okay, fine. But I think what he may do is that even if he thinks the economy is worsening, he may try to downplay it, right? Because if he comes out saying that the economy is doomed and we're doing really, really badly, this market's going to take a nosedive. It's, Jerome Powell standing up there and giving us, clues that the economy is doing bad suddenly is not going to be good, right? So I think what we could do is we need to start looking at what's being priced into the projections. Hold up! Do you want to learn how to trade? Then you need to jump into our Telegram community. Link is in the description. In our Telegram community, I share my altcoins. I share how I do my trade setups, how I do my stop losses and take profit, so you could learn to become a profitable trader. Check it out. Link is in the description. Now let's take a look at the last summary of economic projections, which we got at the end of December. At the end of December, we were told that we were going to get only 2 rate cuts, right? 2 rate cuts in the whole of 2025, getting us to 3.9. Now, at the time, that upset markets, right? Of course, because we were expecting more. The market wants to price in 3. Right? If you take a look at the Fed rate monitor tool and kind of go down towards the end of December, the majority of the market wants to get to 3.75 to that 4 range. Some of the market is trying to price in that will go even lower to that 3.5 to 3.75 banding. The summary of economic projections as of December, which again was before all this tariff nightmare, before some of the data we've got out, we were told by the Fed you're going to get 2 rate cuts this year. You're going to get to that, that 3.9 range on the Fed funds rate. And by 2026, by the end of that, you're going to get to 3.4. So a really, slow easing off of these rates. And of course, this would be in line with what is known as a soft landing, right? If everything was going smoothly, the economy was healthy, and you're working your way towards this 2% rate. Now, if you look at trueflation, we're already suggested that we're below the 2% rate. I mean, if you look at the last CPI reading, we've seen meaningful progress towards that 2% rate. And again, I use that term on purpose because that's the benchmark Jerome Powell uses. He says, I want to see meaningful progress to our 2% Fed funds rate target. Well, we're making that meaningful progress. Therefore, why are we saying at such prohibited levels for so long? And I think one thing we need to take a look at is this. If we take a look at the price in terms of change in GDP, this could give us a clue as well. At the end of December, they projected that 2025 change in real GDP would be 2.1%. They revised that up from their September meeting by 0.1. I want to see this. I want to see this number. Where does it come in? And we can look at the 2026 and 2027 figure to see where do they see GDP going. That's going to give us a clue around, do they think this economy is doing bad? Are we heading into a recession? Are these growth figures being revised down? Same. I want to see what are they projecting for unemployment. Remember, this revised down from 4.4 to 4.3, indicating that the economy was doing better than expected as of December. Again, are they going to change this? Do they revise this up to suggest there's more unemployment going on? I want to see what do they do with the inflation, right? Do they show that PC inflation's coming down? Do they project it to go up? These are all the metrics we'll be going through when they give the summary of economic projections later on today, and you want to be looking out for these details. The markets will move based on these details. But if I had to pick one, jump on over to this page. I think this is what most investors will be doing when the data comes out, is look at this number here, right? Look at this number here to see how many rate cuts are being priced in for this year. If this number changes, this is where it gets funny. This is where I think it's a lose-lose situation. If this 3.9 number changes, you would think that would be bullish, right? You would think that that would mean that, oh look, we're getting our rate cut sooner rather than later. We're getting 3 rate cuts this year. Let's start our altcoin season. Let's start rallying. Bitcoin up, altcoins up. But I just think this may end up lose-lose. And the reason for that is, if Jerome Powell has seen the data and he then goes and revises this down, right, to say, look, we need to be getting to 3.5, we need to be getting to 3.2 on that Fed funds rate, then people are going to be wondering, what data has he just seen? How bad is this economy that Jerome Powell is panicking and changing his estimates for this year? Now, what he may decide to do, which might be a little bit more strategic from him, is leave this year alone so as not to induce panic, because he doesn't want the market to sell off and create a self-fulfilling prophecy. But what he may decide to do is start to adjust the 2026 figures, right? He might start to put it in here, give us a clue in here by maybe notching that down to 3.1%, maybe notching 2027 down a little bit further. And what that may do is give him breathing room to wait until the next summary of economic projections before touching this number. Again, maybe I'm overthinking it, maybe I'm reading too much into it, but for me, this is the number that we need to be looking at. And I don't think there's any good to come out of this meeting. The only good that can come out of this meeting is a surprise rate cut as of today. But again, how is the market going to take that positively? Can you think of a scenario where, maybe you'll get initial pump because the market's going to be like, oh yeah, we're cutting. But then they're going to go, hang on a second, what's wrong with the economy? Why are you suddenly cutting? You only told us you were going to cut 2 times this year. What's going on? What's beneath the veil that we don't know? And so that's why I don't want to, I'm just sitting here just kind of in a bit of a, not a bearish state, just a defensive state, right? Call it a defensive state where I still expect us to kind of come down to these 72, 74 levels on Bitcoin. I'm still ready to buy the dip. But just now, I just don't see a scenario where we can move on news today. I could be wrong. I think he's going to play a defensive today. I think he's just going to, try to palm off most of it. I think it could be a boring meeting, quite frankly. I think it'd be one of those meetings where he's just kind of saying, look, more progress, we're on track, got to keep going, blah, blah, blah. And then he's going to fob it off to the next meeting. Because where we're at now, I can't see a scenario where if he touches this number, if he changes it even to 3.7, if he changes it to 3.6 or 3.5, this market is going to hang on a second. What's up with the economy that you're speeding up your rate cut? So he's in a lose-lose situation. We're in a lose-lose situation because of it. And so I think the best we can hope of today is just a nice boring meeting, come out of it, see where the market wants to head, and then kind of see where we end up in April. I think in hindsight, we're going to look back at this March and April period as probably a nice opportunity to buy the dip. Maybe this whole 90-day period, right? Maybe even up to towards into May as well. Maybe this period where Trump's coming in so aggressive against the tariffs could be the period where we get our opportunity to buy the dip. And thereafter, once things start to normalize, hopefully we start our rate cutting cycle. Now, the important thing to remember, guys, is if we do end up thrown into a recession, a sudden panic recession, right? Rates will come down very quickly. They won't come down like the summary of economic projections happening. No, this is a soft landing, right? Year by year, cutting 2 rate cuts, and eventually, even by 2027, you're only at 3%. No, this is a nice soft landing, pattern that you would have if the economy is holding up very well. If, however, data suggests that you're heading into a recession, that you're now coming down into negative GDP figures, quarter over quarter, and 2 consecutive ones equals the definition of a recession. Remember, Atlanta now provided their latest estimate for the GDP growth for Q1 as 1.8%, guys. minus 1.8%, that the economy contracted by minus 1.8%. So, when you look at that, if that's going to happen, if Trump is going to be driving the US into a recession, again, that's going to create a quick, fast rate cutting cycle, a very quick one where you're just seeing, double rate cuts, 50 basis points, 50 basis points, 50 basis points, potentially a couple of meetings in a row to bring that rate, Fed funds rate down to a lower percentage. And again, longer run, they're saying they want to get to 3%. Maybe if we're tumbled into a recession, they need to bring that into 2, into 1. Maybe you get to, 0 and you start stimulating the economy. It just depends how deep and how bad is this recession. Now, of course, Trump is not going to let Jerome Powell sit there and stop this economy from being stimulated. He will be knocking on the door. He will be speaking to Jerome Powell. He will be putting pressure on him to bring rates down so that it improves his voter base, right? It helps his voter base, more money in their pocket, more stimulated economy. He's on our side as far as that's concerned. But for now, lose-lose. We can't win. And I just want you guys to take that on board into today's meeting. Let me know your thoughts on FOMC today. How are you playing it? Again, not much for me to do. If we get a crazy dump for whatever reason over the next couple of days or weeks, I'm ready to buy the dip. And outside of that, there's not much more for me to be doing in this market. Be patient. Buy the dip, make sure I've got conviction in my portfolio, make sure I'm not holding any altcoins, which if Bitcoin went down to 70 or 60 or even lower, I wouldn't want to hold, right? Now is the time to hold conviction plays in your portfolio, such that if there's more of a downturn, if there's another 10% pullback, another 20% pullback, you've not got any ones in your portfolio which you're looking at saying, why did I hold that? Why did I hold that? Because those are the coins that will go down 90%, guys. Don't have any coins which you do not have conviction in, which you're not willing to buy the dip on. Only have coins which, if we fall 20% from now, 30% from now, you're pulling out your wallet, you're buying the dip on it because you have that kind of a conviction in those projects. If you got any of those other ones you're carrying in your portfolio, now is a good time to think about getting rid, detaching, because the reality is you don't have conviction in a project. Maybe you bought it because your friend told you. Maybe you watched a YouTube video and bought it. Maybe you saw an X post and you bought it. Those are not the kind of projects that are going to set you up for wealth in crypto. They're going to get you wrecked. So there you have it, guys. If you appreciate this type of video, smash some likes. Do not forget to subscribe. I'm not going to be streaming FOMC. Again, I told you guys, this has become a novelty now amongst crypto Twitter. When I used to do it, I was the first one covering FOMC. I'm from a TradFi background, so I used to break this stuff down anyway, and I used to cover it off on the channel. Now everyone's just doing it for view baiting. Go watch another stream for it. But if there are any pertinent updates from Jerome Powell, you guys can trust that I'll spin up a quick video for you guys to give you my input. If you like this type of content, smash the likes. Do not forget to subscribe, and I'll see you in the next one.